Hello everybody, a very quick video today. MSTR is up, I'll take it. Briefly want to talk about stretch, getting back about 99 and the maintenance ratio changing for stretch, and what we can learn from DeFi Development Corp, DFDV's warrant issuance, and what that could do to MSTR if MSTR decided to do the same thing. I thought this was pretty clever, so we're going to talk about that. So let's go. Strategy is up today. Of course, it's still underperforming Bitcoin. Bitcoin, same market hours with IBIT, is up 1.3%. Strategy is up 0.7%. So, probably going to take a few days for mNAV to recover after an awful day like we had yesterday. But I'll take the win today. I'll consider us being green a win today. The bigger win of the day, though, is Stretch getting back above 99. Stretch can be ATM'd on again, but more importantly, the margin requirement, at least on my Robinhood, tell me if it's the same for you or not, but it's 50% right now. My guess is it's going to keep dropping as more volume comes onto this asset, but 50% is good enough because that's your initial maintenance requirement anyways whenever you use margin. So it's roughly the same unless it drops, but this stock is not going to drop very much. Look at the volatility, 6%. I mean, this is as stable as it gets. There is next to no volatility for Stretch. So, of course, this is not something I'm doing. I love volatility. I love owning stocks free and clear. I love owning common shares, common stocks. That's what I do. But there's a lot of folks out there who are into rate arbitrage, who are into retirement, who are into income. And so the spigot of margin, the Robinhood margin spigot, going towards these preferreds is activated as far as I'm concerned, because some people are going to see this arbitrage opportunity because, of course, the yield of Stretch is 10.36% and Robinhood charges you 5.5% or less, right? Above 100K, you are at 4.75%. So it charges you way less. So you make a delta of above 5%, above 5.5% actually, on money that you borrow, on money that you don't have, and the volatility is 6%. So the volatility is very low, and you also have an asset that is designed to trade at 100, right? It's not like you're doing this on an asset who's designed who could go up or down, but it's not like you're doing this on an asset who could crash. Technically, this asset Stretch is designed to be trading at 100. So that's why a lot of people find it appealing. Of course, no recommendation ever on this channel, no financial advice, but a lot of people like that arbitrage. And so I think we could see money flows go to Stretch pretty soon as people catch on to this, because it is an anomaly that this pays this much and that the rates are this low. If you believe in Bitcoin, which you would have to believe in Bitcoin to touch this, if you believe in Bitcoin, this could be interesting for retirees. No financial advice and not something I'm going to do, but some people will. I want to talk about DFDV. So DeFi Development Corp, I've covered it on the Patreon before. I've talked about it many times on the Patreon, Solana Treasury Companies. I haven't talked about it enough. If you believe today's performance was pretty good. But anyways, what this can teach us for strategy is very interesting. So today they surprised the market by dividending out a warrant. So they're dividending a call option, essentially. It's a call option that they're giving, but it's called a warrant because it's issued by the company. So they're dividending out a warrant to owners of the common stock, such that each owner of 10 common shares gets one warrant. And so this is equivalent to them, giving about $10. Last trade was $8.35. Robinhood says this warrant, this option would be worth $11. So this is equivalent to them dividending out like $1 per share, right? 10, because you need 10 shares to get one warrant. This is very interesting to me, a very interesting way to reward the shareholders while also them raising funds through early exercise and raising funds, in 2028, assuming the price is higher, they're going to raise funds at 22.5. So this is a very interesting way to mix a dividend, and you mix a dividend with also fundraising likely very little fundraising, until we break 22.5. But if we were to break 22.5, let's say, the next few months with the Solana ETF, you would have some people who would likely exercise early, right? That happens often. People exercise early. So anyways, this is a very interesting way for them to do that. And furthermore, if you look at the stock was up $2, right? And they're dividending out about $1 per share. That's about the value of this warrant per share. And it's up $2. So what does that tell you? There's a lot of optimism on this offering. The market is very optimistic about that, and we're catching up back to 1 mNAV. This stock has been sold off a lot. What I want to say about this is I did some research. Of course, MSTR is heavily shorted. Now, what happens if, surprise, surprise, somebody issues a warrant? Well, just like if somebody issues a surprise dividend, if somebody issues a warrant, you are going to force the short sellers to give the warrant to whoever you borrowed the shares from. And these warrants can be bid up in value, because the value of these warrants, contrary to a cash dividend, the value of these warrants is directly linked to the volatility of the stock, because a warrant is just a call option. So the volatility of the stock is going to raise the value of the warrants. So according to AI, this could, I didn't even ask, I didn't ask a leading question. I didn't say, do you think this should be a short squeeze? I just asked, what are the implications on this? Well, the AI, the first thing it tells me is how it could create a short squeeze. That's some of the potential implications. This hurts the short sellers when you issue a warrant, and this doesn't really hurt the common shareholders, because the common shareholders just get the money in the form of something that has value due to the volatility, but not in the form of cash going out the company. And you get the money in the form of something that is only dilutive at a higher price, and if people actually exercise at that higher price. So it's very interesting to me. I think strategy should look into doing this, into doing a surprise warrant dividend, because it really doesn't hurt the common shareholders. On the contrary, it's a plus for the common shareholders. It's a way for the company to raise more money eventually, and it's a way for the shorts to kind of like be hurt by their short, because shorting kind of hurts the stock. So anyways, I think this is pretty interesting. I think strategy could do this. So this was not financial advice, not investment advice. This is only entertainment on this channel. I hope you were entertained. Please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.